Good morning, everyone. We're just giving people a moment to come in and we'll start shortly. All right, well, good morning, everyone. Welcome to our Tranche 2, a practical guide to implementing AML CTF compliance. Thank you for joining us. My name is David Hornstein, and I'll be your host for today's webinar. What we're going to try and do today is give you a bit of a clearer picture on what the AML CTF Tranche 2 reforms actually mean for businesses and what you can start doing today to get ahead and get in front of it. So before we begin, I'll just cover a few housekeeping matters. We will run for about an hour. We do want this session to be, and actually we're pretty good at like keeping the time, so we will be done within 60 minutes. We do want this to be interactive, so feel free to ask questions. There is a Q&A function in the Zoom panel down the bottom of the screen. We'll leave about 10 minutes at the end for questions. So do use that and we'll try and cover them at the end. And after this session, we will share a recording with everyone that has registered and joined us. So with that, let's kick off with some introductions. I am David Hornstein. I'm the CFO and COO at Wheel. My background, I spent just over a decade at Citigroup in the investment banking M&A advisory team there, and then joined Wheel just over 4 years ago now, actually, to help scale up this business. Wheel itself, we are a AI-enabled spend management corporate card platform. We work with about 4,000 businesses across Australia and New Zealand. And I guess another part of my role that very relevant for today is I also oversee our compliance and AML CTF program. We are a regulated entity, so this is a topic that's very near and dear to us, and we've been under this regime for a while. And I thought it would be great to bring along Emma, who has partnered with us over the last few years to help bring our program to life. So Emma, why don't I hand over to you to introduce yourself and your background?
Thank you, Damon. Good morning, everyone. My name is Emma, and I'm the Managing Director and Compliance Officer of a company called Braun ID. So at Braun ID, we help businesses like Will and other, in the past, Tranche 1 entities, but now more and more Tranche 2 entities to comply with the AML CTF Act and the AML CTF rules. In particular, we provide a platform for customer due diligence, KYC, PEPs, sanctions, negative media screening, but we also help businesses with development of their AML CTF programs, doing their risk assessments, and other compliance work. So we've been around for 10 years. I've been doing this for more than 10 years. And together with Damon today, we will try to unpack Tranche 2 for you.
Excellent. And look, Emma's been an excellent partner for us over the last few years, super knowledgeable on this topic. For Wheel itself, we do kind of the whole spectrum of AML CTF activities. So as we get to Q&A in the end, we might even just try and share some of the learnings and insights we've had from our journey together. But that's all from me. Thrilled to have Emma here with us. Emma, I'm going to hand over to you. I'll put myself on mute and lead the show to you, and then I'll come back at the end for our Q&A.
Okay, thank you, Damon. Let me share my screen in my presentation for today, and then we can go from there. Okay. Okay. I think you can see my screen. Okay, so let's get started. So today goal is to cover the upcoming Tranche 2 reforms in the AML CTF Act. So to start with, I would like to go back in time and give you a little bit of the history of why this change is happening, why all of a sudden accountants, lawyers, some precious metal dealers that were not covered before are now included and regulated in the AML CTF Act. So historically, when Australia set up the AML CTF Act, it was designed to be in two tranches. So Tranche 1 included all financial services businesses, banks, remitters, more recently, cryptocurrency exchanges. So pretty much anyone who dealt with funds or assets like stocks, bonds, derivatives, or similar. Initially, when the act was set up, it was envisioned that later down the line, the designated non-financial services businesses like professional service providers, like accountants, lawyers, real estate agents, will be included. And the reason why they wanted to include this is because these businesses are also vulnerable to money laundering and terrorism financing. And it was one of the recommendations of the global standard setting body for AML CTF efforts that countries make, which is called FATF, so Financial Action Task Force. So the FATF would typically set the standards, they set the recommendations, and then they allow countries to implement them within their legislation and regulation. FATF countries will do mutual evaluations over a particular period of time, and they will identify gaps and make recommendations. So the last evaluation that Australia had was in 2015. One of the recommendation was that Tranche 2 to be implemented, so all of these professional service providers to be included under the regime. So in the last 17 years, since the beginning, so actually 20 years since the beginning of the act, and in the last more than 10 years since the last recommendation, there was a stalemate. There was not a lot of the climate was that these businesses should not be included because of regulatory costs. A lot of lawyers especially were lobbying that cost to benefit ratio was not there for them to be included. However, the next evaluation is coming in 2026, 2027 for Australia. And Australia was one of the very few countries left in the world that did not regulate this type of businesses. So this would eventually come on the next evaluation, and what the FATF, they don't have mechanism to punish you or issue a penalty to the country, but they would eventually put the country on a gray list that does have some potential economic impact on the country because other countries will consider Australia as a higher risk country. So this was eventually coming. We knew for years, 10 plus years, that Tranche 2 would have eventually happened. And it actually happened in 2024. So in 2024, the existing AML CTF Act was amended. And all of these professional services, including practices like yourself, accountants, were included in the act. Just for comparison, prior to Tranche 2, 1st of July this year, there were around 17, I believe, thousand regulated entities, banks, remitters, stock investment platforms, wealth management. And now with Tranche 2, there will be around 100,000 regulated entities. So you can see how the scope of the AML CTF Act has significantly has expanded. So these new businesses can register with AUSTRAC starting from 31st of March 2026. And the obligations for them to start adhering to the requirements of the AML CTF Act will start from 1st of July 2026. So this is quite timely. That's 1st of July is in exactly 2 weeks from now. And if you are providing any of the designated services that we're going to cover later, and you have not enrolled with OSTRAC and you're not compliant, the penalties can be quite high. Starting from, it can be as simple as a remedial notice, but also civil penalties that are in the millions of dollars. So the first thing you need to understand and analyze with your business is whether you are captured in the reforms or you're not. And this depends on what you do and not what you are. Meaning, if you are just an accounting service provider and you don't provide any of the designated, they're called designated services with a geographic link to Australia, so providing services in Australia, and is not part of the services listed in Section 6 of the AML CTF Act, then you're not captured. So if you just do, the typical accounting services like preparing tax returns, preparing providing general tax advice to your clients, doing if you do audits, so financial audits or assurance engagements, or just a simple bookkeeping for your clients without the control of their funds, without touching their money, then you're not captured. Then you don't even have to register with OSTRAC. You can continue doing what you do till the moment you decide to provide any of the services that are included in that Section 6 of the AML CTF Act. So what types of services are included? So if you are helping your clients setting up like a body corporate structure or a discretionary trust or set up a self-managed super fund, then you're captured. If you are helping them create a company or restructure a company, then you are captured and you need to register with OSTRAC as a reporting entity. If you are if you're holding money in your trust account and managing clients' money through that trust account, then you're captured. And even things like if you are providing nominee director services, or if you're providing registered office address for businesses, then you will be captured within the reforms, same as dealing with buying and selling real estate for individuals or businesses. So if you go to Section 6 of the AML CTF Act, you will see there are different tables. And in the tables, these designated services are under different items. So different items will apply to you. And as I said, anything that's related to managing clients' money, helping them and assisting them buying property or business transfer assets, financing, that is captured under the reforms. Same applies to helping them with creating companies, restructuring, setting up trusts, setting up, helping them with having nominee directors and other officer roles, as well as providing them with like a registered office and address. All of that is captured under the reforms. So then you will need to comply. So a typical example would be, let's say a customer comes in, it has been a customer for the last 10 years. They're looking for some tax advice on how to manage their assets. If you do provide just like a general tax advice and say, oh, having your assets in a family trust will be more tax efficient than doing what you're doing now, then that's a general advice. You're not necessarily providing a designated service. The moment they engage you to set up that trust, when you start drafting in the trust deed or setting up the trust and maybe acting as a settler to set up the trust, that is considered a designated service. And that means that that part of your business is regulated, and everything that you do to provide that service needs to follow some of the requirements that are outlined in the AML CTF Act and rules. So general advice, tax advice, it's not captured. If this is a business that you've been doing bookkeeping for them, you've been lodging their tax return for them for the last 10 years, you can still continue doing that for them, and that will not be regulated. You don't have to do any of the mitigation controls that we're going to cover in the next slides. But the moment they ask you to maybe set up a trust for them or set up another business, let's say they have an operating entity and they want to open a branch, and you set up that branch for them, then that is captured. If they ask you or if you provide a nominee director services, or they can use your practice address as their registered business address, then that's captured as well. Then you will need to enroll with OSTRAC as a reporting entity and have a program, and then follow all the other requirements in the Act and the rules. So let's say that now you realize that maybe you're providing some of these services that you need to be, you are one of the regulated entities because you provide a designated service. The first thing you need to do is you need to enroll with OSTRAC. And this is a fairly simple process. Technically, you should enroll within 28 days of providing the designated service. So let's say you were not providing the designated service, you're not enrolled. And if you now provide a designated service, you have 28 days to enroll, so you can be compliant. If you, so the rule of thumb is if you already provide these services occasionally or regularly to your clients, then you should enroll now. So the enrollment for Tranche 2 entities opened on 31st of March, 2026. And starting from 1st of July, you're captured under the Act and the rules, and you will need to comply. Depending on the complexity of your business, then you may enroll as separately as your company, or maybe enrolled as part of a reporting group. So we've worked with the setup for some of the bigger accounting firms. They would usually have different entities with different branches in different states, or different entities within a group for different services they provide to their clients. So some is audit, some is like dealing with real estate, another group for setting up corporate entities and trusts. Instead of every separate entity to report separately to OSTRAC, to be a reporting entity to OSTRAC, you can create a reporting group and report as a group, which simplifies things quite a lot, because you can have one program, you can have one procedures for everything. And it's also easier when you deal with providers like us, to just have one account and pay one subscription instead of having different accounts for every entity within your group. So if you haven't enrolled with OSTRAC, what it looks like, I would say it's a fairly simple process. You provide your business name, you provide the controller details, you have to appoint a compliance officer, you provide some general information about your business, and then you're enrolled with OSTRAC. Everything is done online through OSTRAC online system. So once you're enrolled, you become a reporting entity, and now you need to comply with the requirements. So what does that look in practice? What does it mean to comply? You're just being enrolled with Austrac, sending their details, saying, "Oh, I'm ABC Pty Limited accountancy firm." It doesn't mean you're compliant. You're just enrolled. You're a reporting entity, and now you need to comply with all the requirements in the AML CTF Act and the rules and the different guidance that Austrac publishes from time to time. The first thing you need to do, so this is absolute first thing that you need to do, is you need to develop an MLTF risk assessment. So that's money laundering and terrorism financing. And now with the after tranche two, proliferation financing has to be included, risk assessment. You need to identify and assess the risks of your business being misused for money laundering, terrorism financing, or proliferation financing. Typically, you will analyze these risks in 4 different categories. Some risk assessments may include 6 different categories. It really depends on the groupings that you're going to use. And these categories are clients, so the types of clients that you'll have, delivery channels, products and services, and jurisdiction or a geographical risk. So in practice, what does that mean? So let's start with clients first. What type of clients are you onboarding? Is it just individuals? Do you work with companies? Do you work with trusts? Different client types will have different inherent risks. So individuals are typically lower risk. Corporations and some more complex trusts will be higher risk due to potential obfuscation of ownership. You will calculate the inherent risk, and then you will need to create mitigation controls to lower that risk to an acceptable level. That will be the residual risk. It needs to fit within your risk appetite so you can accept those clients as clients. Other client parameters can be like the number of clients or where they're based or the type of origin of wealth and origin of funds they have. So for example, let's say you're working with businesses as clients, and if those businesses are remittance platforms, they will be considered higher risk. Or if those businesses are cash intense businesses, then they will be considered higher risk due to dealing with cash, which is inherently riskier when it comes to money laundering because it's one way that criminals can actually more efficiently move money around without being traced. And then if you're dealing with businesses that are lower risk, let's say you're dealing with hairdressers that are just charging everything through like a bank account, like post terminal, then that may be considered a lower risk. You will make your risk assessment. Consider it as like an Excel spreadsheet with you will outline the risks that you have per category. You will have another column for inherent risk. You will design your mitigation control. So how are you going to lower the risk? So let's say you have clients who are businesses, then you will need to do due diligence to understand whether those businesses exist and to understand who are the beneficial owners of those businesses, and then have that residual risk that's acceptable to you. Service risks includes the types of services that you provide. So some will be lower, some will be higher risk. So for example, helping the customer with real estate transactions or big money movements will be considered a higher risk, but maybe providing them an register address, you'll consider that a lower risk from money laundering point of view service. Delivery channels. So do you meet your customers in person, or do you provide everything online and it's self-serve? That's definitely will affect the risk profile of your business. And then geographies. So are your customers Australian residents? So Australian citizens and residents or Australian-based businesses, or do you support clients from overseas? So, for example, you work with international corporations that are setting up branches in Australia, for example. So that would definitely affect your risk. And if you're dealing internationally, what countries you're dealing with? Is it like a lower risk jurisdiction, like the UK or the US, or a higher risk jurisdiction, like somewhere in the Middle East, for example, or maybe some Asian countries? So once you set up your your MLTF risk assessment, so money laundering and terrorism financing risk assessment, you will need to understand what are your risks, and then you design, as I said, mitigation controls. So this mitigation controls will be on a policy level. So what is your policy and what are your procedures to enforce these policies? And they will be included in an AML CTF program. So everything that I just said will be the basis of your AML CTF program. So let's go back to the example. You're working with businesses. They're higher risk due to potential for obfuscation of ownership. Your policy is not to deal with anyone who you do not know. So you create a procedure for customer due diligence, which is one of the required procedures under the AML CTF Act and rules. You create a procedure, you define that procedure in your AML CTF program and explain exactly what you check when you onboard a customer that's a business. Let's say you will go and check ASIC for their ACN registration. You will go and check ABR and see under what name they're registered and if they have any business names. Then you will pull the data for the directors. You will pull the data for the shareholders. You will analyze if the shareholder is a complex structure. You will drill down the ownership structure and figure out who are the beneficiaries behind it. And then once you're satisfied with that, only once you're satisfied with the customer due diligence you've performed, then you will onboard the customer. You won't just accept a customer who has not gone through your customer due diligence process. Or for another example, if someone comes in, wants to set up a trust, if they say, okay, well, I want to deposit $100,000 and as a settled sum for this trust, you will ask for origin of wealth, origin of funds. You will perform customer due diligence, and you will perform other checks, like check for if the person is a politically exposed person, if they're on a sanctions list, and similar. So this is your AML program. In practice, it's this very long document. It doesn't have a specific set of pages. It should be, but it should contain your risk assessment that should be at a level that is appropriate for the complexity of your business, and it should contain your policies, procedures, and controls. You will need to every business has to have a compliance officer that's appointed, and they will also be included in the OSTRAC enrollment. The compliance officer will oversee the day-to-day compliance of the business and will be the contact point for OSTRAC. And if you're a very small practice with 1 to 10 people, the compliance officer may have multiple roles. They may also be the CEO or the CFO. It's very common. If it's one-person operation, that one person will pretty much do everything. And under the Tranche 2, this was not the case before, but now you can also outsource the compliance officer function, but the compliance officer has to be an Australian resident, and they have to be a natural person. So you cannot appoint a company to be the compliance officer. So they have to come with like first name, last name, be an Australian resident, and be fit and proper for this role. On an ongoing basis, there is a requirement for an independent, internal, but also independent review of your program. You would typically every 3 years work with an external person who has not been involved in the development of your program or execution of any of the policies and procedures to perform an independent review and tell you whether there are any gaps that need to be remediated and ensure that your program is effective for the type and complexity of your business. And it's not enough just for you to have this big document and put it in a drawer. You need to get everyone on board in your business. So you will need to train your personnel. You will need to make them aware that your business is not regulated, what they need to do to be what they and you need to do as a business to be compliant with the AML CTF Act. What are their responsibilities? You need to do a risk awareness training. So explain to them what your findings in the risk assessment. So what are the risks, how your business can be used and abused for money laundering and terrorism financing, and what are the procedures that you're going to do to prevent that. So how do you do an AML CTF program? You can do it yourself. You can hire someone to do the program for you. And recently, Austrac published a program starter kit for accounting firms. So these program starter kits were published for Tranche 2 entities. Typically, you will see in the first page of the program starter kit, there is a guidance that explains would the program starter kit be applicable to you? Because it usually applies to low complexity practices that deal with domestic clients that don't have a self-serve offering. You can extend it to include these cases as well. But if your business is more complicated, you have more than 15 employees, you're dealing with multiple designated services, then you may want to hire professional help, or you can do one yourself. So if you do decide to go with the program starter kit, you can go to Austrac online, just Google accounting program starter kit, and it's a step-by-step process. First, you will need to assess whether this kit is something that you can use, or you will need a more complex approach, more bespoke approach. And then there are different Word documents where you can, with some preset risk assessment templates and some preset pre-written policies and procedures that you can customize for your business and use. And then the AML program is not one set and forget document. It's a living document. So you will need to review it on an ongoing basis. So if you introduce new designated services, if you introduce new customer base, if you expand and go to new geographies, if you maybe use different channels. So let's say you were dealing face-to-face with all your customers and all of a sudden you want to scale your business through technology, then you will need to update your program on an ongoing basis and keep records of all the versions that you have. So I also do quite a lot of audits, so independent reviews. So sometimes I will receive a program from a client and I don't even know what version it is. Is it the first version? Is it the fifth version? You need to have a version control table, usually on the front page. It can be anywhere, but it's usually one of the first 3 pages that says how this document has changed over time and what triggered that change. So another option, as I said, is you can hire a firm that can do all of this, for you. Typically, they will start with a risk assessment of your business. They will understand your business and then design policies and procedures that would be appropriate for your business. So how I usually approach this and how we design programs is we would usually look at what you already do. So we don't want to include anything in the program that you don't do. So we will see what procedures you already do. Can we bring them to be compliant with the AML CTF Act and then include those rather than make up some procedures, include them in the program. Then you may do something that's compliant with the act, but it's not compliant with the program. That makes you non-compliant with the act. So you will want to work with someone who can customize this document to your needs rather than give you a template version that may not be suitable for your business. Okay, so that's what you need to have in terms of documentation. From practical point of view, what does this mean from like a day-to-day compliance? So what do you need to do now that you're starting 2 weeks from now, let's hypothetically, you become a reporting entity because you're providing one of these designated services that we mentioned. What does that mean to you? So one of the biggest changes for accounting firms is now one of the requirements in the act and the rules, and that is to perform customer due diligence. And there are several types of customer due diligence you need to perform. So the first is initial customer due diligence. It can be very easy to do this or very complicated depending on the client types that you have. So if you're dealing with individuals, that typically means you will need to collect their ID documents, you will need to collect their full name, date of birth, address, and like a unique identifier, and then verify that. And you can verify it by collecting their driver's license, passport, Medicare card, or another ID document. Or you can verify it electronically with document verification service. So typically you will need to work with a service provider for this because typically the access is exclusive. Or you can do a combination. Now with the updated Austria guidance, let's say you're onboarding customers online, you cannot see them in person, you will also want to perform something like a biometrics or a liveness check. Once you verify their identity, this is not where it stops. You will need to perform additional checks, such as you will want to check that whether they're a PEP or not. That stands for a politically exposed person. And that is a politician, or it could be a judge, or a local mayor, or similar, or it can be an associate of a politician, let's say the wife of the prime minister. You will want to check if they're sanctioned. So this is especially important if you're dealing with international customers. So let's say you're helping a foreign customer purchase property in Australia. It is very important that you check whether they're on any of the sanctions lists. You can check if if there is negative media, something negative about them in the news or any published notices from regulators or similar. And then you will need to assess their MLTF risk. So you will need to assess this customer and whether this customer and relationship with this customer is low risk, medium risk, or high risk. And how would you do that? So if a customer comes in, they are a simple husband and wife, they want to set up a family trust to protect their assets. Both of them make $150K in salary. They will set up a simple trust with $10 settled sum. This can be, and it's very easy to verify them. And very easy to understand where their income and wealth is coming from, and what they're investing, let's say, is in line with their income and wealth. Then you can consider that customer a low risk. But let's say you have a customer that is coming as a complex entity. So I said your customers can be individuals, but they can be complex entities like trusts and companies that can have a very convoluted ownership structure. And this customer wants to invest not invest, but deposit or purchase a real estate property of tens of millions of dollars, but you can only verify that their income is in the hundreds of thousands of dollars. So there is a mismatch discrepancy, then you will need to perform deeper checks, more complex due diligence, which we called enhanced customer due diligence, and collect data on their origin of wealth, origin of funds, and try to verify that. So to understand whether you want to proceed working with this customer, or if you proceed and submit a report to OSTRAC or not proceed with the customer. So the due diligence depends on the risk profile of the customer and of their type. If you're dealing with customers who are complex entities, they're companies or they're trusts or they're associations or they're government bodies, you need to identify and verify their beneficial owners. These are individuals that can benefit or control the entity. So there is a threshold, it's 25% or more. So any natural person who directly or indirectly can control or benefit from or own the entity that is your customer is considered a beneficial owner, and then they will need to be verified same as you verify the individual customers. Because accounting firms were not regulated, and it's likely that your customer base is not used to these checks, expect that you will get a lot of questions from your clients on, oh, why are you asking these questions? And why are you asking for my driver's license or my passport? These checks can be, and requests can be intrusive, and customers don't always feel comfortable providing the information. So you will want to train your staff on how they will explain to the customer on why this data collection and verification is needed. And as much as possible, and as much as your budgets allow, you can use technology to solve some of these issues, because searching PEPs and sanctions databases manually, it's very difficult and not practical. So you would typically want to engage to use a technology solution to do the PEPs sanction screening, to do the ID verification, so you can make the customer onboarding process easier. You also need to report to OSTRAC on an ongoing basis. There are 3 types of reports typically for accountants. One is the annual compliance report. This is like a survey every year that OSTRAC sends. Actually, they don't send it to you. You log into OSTRAC online and you need to complete it. Now with Tranche 2, the deadlines are different from before. So now you need to complete it by September, and it covers the financial year, not the calendar year as before. So it is a bunch of questions around your business, the types of customers you're on board, when was the last time you had your program reviewed, things like that. One of the key things that you need to submit to OSTRAC is a suspicious matter report. So if you're dealing with a customer and you raise any kind of suspicion of potential money laundering or terrorism financing, you need to report this matter within 3 business days or 24 hours if you suspect it's related to terrorism financing. And this doesn't necessarily need to be a customer that you have. It can be a customer or a prospect that is inquiring services, a designated service. You decide not to work with them, or they decide not to work with you, but their request is suspicious in a way that seems like they do want to either they've done any of the predicate offenses, so let's say something like a tax evasion or similar, and they need to use your services for money laundering or terrorism financing. And then if you're dealing with cash, any physical currency dealings of $10,000 or more in physical cash currency, then you will need to report TTRs to OSTRAC within 10 business days. And there is one important requirement of no tipping off. So if you submit a suspicious matter report, this is not something that you can communicate with the customer or disclose to anyone else that doesn't need to know this information that may prevent or affect an investigation or potential investigation. So let's say a customer wants to set up a trust with like a very high sales amount, and you cannot verify source of wealth, and it kind of looks very suspicious to you. You will submit an SMR, and you will not disclose this information to the customer. Disclosing this information is actually a criminal offense. So you cannot say, well, we just reported this transaction to OSTRAC, so we'll just wait for them to see what they're gonna say, and then maybe we will onboard you as a customer. Absolutely, you cannot disclose this information to the customer. Another important requirement is record keeping. So you need to keep records for 7 years. This applies to your AML programs, risk assessments, customer due diligence records. This is especially important because customer due diligence records usually contain sensitive information like driver's license, passports. So you may want to consider a solution that provides encrypted and safe storage. Especially if your practice is not equipped to deal with cybersecurity yourself, any transactional records related to the designated services, and any other compliance activities like training programs, reviews, escalations, submitted reports, all of that you have to retain for 7 years. And that 7-year period, so for example, with dealings with a customer, is from the time of the last transaction with the customer. So let's say you've had the customer for 10 years, you've been providing 10 years designated service to this customer. The 7 years start from the last day rather than the first day they became your customer. And then, so your action plan for Tranche 2 would be the following. First, figure out whether you provide any of the services in Section 6 of the AML CTF Act in any of the tables. I can follow up and just send you a list of the items that we typically think may apply to accountants and confirm whether you're captured within the scope. If you are, you need to enroll with OSTRAC. As soon as possible, preferably before July, but you can do till 29th of July. Then figure out how you're gonna develop your program. Are you gonna hire a consultant? Are you gonna do it yourself? Will you use the starter kit? Will you just do it yourself and not use any templates, but just draft it out yourself? You need to appoint a compliance officer. And then everything you've written down in the program, customer due diligence procedures, client onboarding, how do you do beneficial ownership? How do you screen customers? How do you submit reports? You need to have those procedures in place and train your staff to be able to execute the procedures. So that's in a nutshell what you need to do to be compliant with Tranche 2. I'm going to open the floor for questions. And let's go from there. And if you have any other questions after this webinar, you can contact me at info@bronid.com or emma@bronid.com, and happy to answer any questions that you may have after this webinar.
Excellent. Well, look, Emma, very comprehensive, a lot of information there for people to digest and take in. And yeah, just to remind everyone, you'll have access to the recording afterwards, so you'll be able to go back and listen to the information that Emma shared very comprehensively the last 45 minutes. let's jump into questions, and I've got a few, Emma, that have come through already. So I think, yeah, you mentioned that deadline of July, that's coming up pretty soon. How how do you think businesses get themselves comfortable that they're not covered and therefore they don't have anything they need to get done by July? And I guess followed from that, who who or what would they go to for support on this or to help them answer that question? Is it, yeah, self-assessed or something that should be done in consultation with a lawyer and advisor or otherwise?
Okay, well, this depends on obviously the how conservative clients are. On Austrac has published a self-assessment questionnaire, so that would be the first place where I think businesses should go, just to answer those questions. And as I said, typically it is of whether they provide any of these designated services or not. So the questionnaire would be, oh, do you help businesses set up trust accounts or set up companies? And if you say yes, then you're definitely covered. Or do you help your customers with real estate transactions? If you say yes, you're definitely covered. If you feel if the accounting firm completes this questionnaire and still feels that they're not 100% sure, then they can contact a lawyer or an advisor. If they want, I, if they're very conservative, I would just ask for a legal opinion, written legal opinion, and the lawyer will make an assessment, and then in that letter, they should outline the different items under which they may be covered or not. But typically, this assessment can be, as I said, be self-assessed, done by an advisor. So if you've hired someone to do the program, they can assess it for you. But to be super very sure, just go to a lawyer, ask for a written legal opinion letter, so you're 100% sure.
Nice. And then I've got a question here in the public chat around how do we know who we need to verify? For example, directors, shareholders, just one person, and maybe even on this, Emma, it's probably worth just touching on if if you do need to verify anyone, does that mean you've probably got a program in place, and therefore does that guide you on that decision?
Okay, that's a great question. Is actually the answer is a bit more complex than people usually think it is. So the old rules, the old AML CTF rules, to be honest, were better in this regard. They were a little bit more prescriptive, and it was much easier to understand who you need to verify, where the new rules are more vague, I would say, but still provide the guideline around what needs to be verified or not. There are two types of procedures for verification: simplified and standard verification procedure. Typically, most of the customers will need to be verified under the standard verification procedure, and they will need to identify an ultimate beneficial owner. And then for simplified verification procedure applies usually to listed businesses or regulated businesses, like a bigger groups. When you verify a customer in your AML program, it needs to say, as for every entity type you onboard as a customer, what you need to verify. So what you need to collect and what you need to verify. In some cases, you will only need to collect the data, and this data, you don't even have to collect it from the customer. You can collect it from a government registry. So for example, directors, their names, their date of birth, or this can be collected from either the customer or the register, but you don't need to go and verify the director unless the director is an ultimate beneficial owner. And then it's more complex to figure out who the ultimate beneficial owners are. Sometimes it's super easy. It's like a simple company with two shareholders. You just verify those two shareholders. Great. But sometimes it's more complex. In this case, again, companies like Braun ID, we do help businesses. When you submit an entity, we will identify the beneficial owners and help you verify them. If you want to do this manually, you just need to have those rules well described in your program. And especially in some cases, it's not super clear who the ultimate beneficial owners are. So there are fallback procedures where you will just find an alternative person who has the most significant control, like the CEO or the managing director or similar. To go back to answer your question, yes, it needs to be well described in your program and to make your life easier. And if your budget allows, just use a solution, text solution, because it will make your life easier quite a lot and will do this complex structure analysis automatically for you.
Nice. Excellent, Emma. Well, look, I think in the interest of time, I'll wrap the questions there. So look, maybe if I could just take a moment here to introduce Wheel's partner program as well. And I know we've got some Wheel partners online today. If you are interested in working with your clients on our spend management offering, the partner program is definitely something that could be worth exploring. We have an end of year offer at the moment where there's 50% off for the next, for the first 3 months. If you are interested in that, we are going to run a quick poll now. If you'd like to hear any more information from either Wheel about the partner program, from Emma and Bron ID about their offerings, you can tick either of the boxes on screen at the moment, and either of us will be in touch. Now, while everyone's answering that, I just wanted to give a big thank you to Emma for joining us today and sharing her expertise and insights. I think particularly the recording will be a great asset for people to take away and just help unpack and understand these changes. And to everyone on the line, thank you so much for giving up your time to join us and learn about this. We will send the recording out to you later today and look forward to seeing everyone on the next webinar that we put together. Thanks for your time.
Thank you.